to another episode of the Dig Deep the Mining podcast. And today's guest is Mark Brennan, CEO and Co-Chairman of Cerrado Gold. Cerrado, that's it, Mark. A privately owned Toronto-based growing precious metals mining and exploration company, build a portfolio of assets in South America, including Argentina and Brazil. Mark's going to give us an overview of mining in those countries and tell us more about the company and obviously how the company is progressing into the next decade. So I'd like to first welcome Mark to the podcast. How you doing, Mark?
I'm well, Rob. Thank you very much. How are you?
Yeah, I'm not too bad, thanks. Appreciate your time coming on onto the podcast to tell us a little bit about mining in Argentina and Brazil, and obviously namely Cerrado Gold. So first of all, just wondering if we can kick off by you telling us a little bit about yourself, about your background, where you graduated to sort of present day, and then I've got obviously a number of questions that I would like to ask you.
Fantastic, Rob. Well, actually, coincidentally, my background, I started my career as an investment banker in London, and left London in the late 90s to come to Toronto and work very much in getting involved in the mining sector. I was part of the management in the founding team of a company called Desert Sun Mining, and in 2002, which we started with a market cap of about $10 million, and we sold that to Yamana. The Jacobina mine to Yamana for $685 million in 2006. Subsequently, that was based in Brazil and still is one of Yamana's top properties. That is where really the Cerrado team kind of came together. Myself and Kurt Mencken, our current COO, who's an ex-Anglo Gold executive, basically who was the operator and the country manager for Desert Sun. We then left and we created a company called Largo Resources. And Largo Resources, also in Brazil, we built a mine there where we spent about $350 million bringing a mine on budget, on time, and now it's the world's highest grade, lowest cost producer of vanadium in the world. So along the way, we picked up some of our team who we're very comfortable working with, and we all have a great deal of experience in Latin America and South America, and also, focusing on operations. So really, we're very, very good at building, at restructuring, at creating, operating companies. And from that perspective, what we try to do is we all try to find the best possible asset we can find, and then we look to build that and drive it. And sometimes we sell it, and sometimes we let the shareholders take it forward and move on. So with regard to Cerrado, it's probably our most exciting project that we've been involved in. Not only do we see a world-class asset in Brazil with huge growth potential and phenomenal economics, but in Argentina, where we're producing, we see we're in a world-class belt surrounded by Newmont, Yamana, Anglo, and basically we see lots of scope for growth. So we're an emerging growth company. These are two brand new stories that we're looking to drive. I'll also just mention, you mentioned we're private. We are looking to be public. We're going to trade in Toronto, and we expect to trade in the first week of December.
Okay. Appreciate you give us an update about yourself and an overview of obviously your career. And obviously you've got a lot of experience in South America, namely in Argentina and Brazil. Before going to talk about those jurisdictions, I just wonder if you can give us a really, I suppose, a dig deep, hence the podcast, about obviously Cerrado Gold and an overview of the company and your story and your history behind the company and where you are today.
Sure. I was in the final stages of restructuring a company that actually had assets called Sierra Metals, which when I left had about a 600 million valuation. But basically, when we were introduced to this project by two geologists who I've known in Brazil for 30 years. I met them through their brother, one of the brothers who ran the DNPM, or the Brazilian Mining Agency. And they came to us subsequent to discovering Brazil's largest gold project called Volta Grande, for a company now within Bellow Sun. They left Bellow Sun, started working on this project, and they brought it to us in 2017, telling us that they believed that this project had 10 million ounces. We went and did our due diligence. We looked into it, and we share their enthusiasm for the project. We can certainly see 5 million ounces. If we can get to 10, even better. But what we see right now is just a tremendous opportunity for a highly economic, strong growth project in Brazil. And so that was the lead of the company. And so we actually drilled the project in 2018. With only 18,000 meters, we recovered 813,000 ounces. So for every meter that we drilled, we ended up with 40 ounces, a pretty strong recovery rate. And so in 19, we started engaging with some majors about working on a joint venture agreement. But in mid-May, we actually started negotiating for this project called Minera Don Nicolas in Argentina, which was a small producer that largely was run very inefficiently. And they had bought, the previous owners had bought the asset for $100 million. They had put $120 million into top class and state-of-the-art infrastructure, and basically, but they weren't operating it very well. They weren't operators. They were a consortium of electronic component manufacturers of all things, and they really were desperate sellers, and they didn't want to be in the industry. Now, this was when gold was at $1,200, and we felt that this project could make $10, $12 million for us on a free cash basis at those kind of gold prices once we got our feet on the ground and turned it around. So as it turns out, obviously gold has moved higher. We're expecting on a very base case to produce between 45 and 55,000 ounces a year in Argentina for the foreseeable future, for the next 8 or 9 years. That should generate for us somewhere in the region of about $25 million of free cash at $1,650 gold. So we see some strong cash flows there that will enable us to grow our operations in Brazil without diluting the shareholders. And so basically, Argentina initially was a strategic choice to drive cash flow, but in actual fact, we've seen some really good opportunities. We're looking right now at an investigation of a heap leach operation, which will be about 20 to 30,000 ounces of additional ounces, which we hope to be in production by the end of next year. So from that perspective, we should exit next year at somewhere in the region of about 70 to 80,000 ounces, generating about 40 million of free cash. And that free cash not only will be used to grow Argentina, but we'll also look to grow Brazil. In Brazil, we started in September a drill program of 17,000 meters. By next March, our target is to be at 1.5 million ounces. And then by next September, our target is to be at 2 to 2.5 million ounces. So again, a very aggressive, we have 4 rigs on the property in Brazil. So combined, we've got a very nice complement. And you mentioned about your experience in Australia. This is a lot of the same construct that Australian companies tend to have, is they have a producer that generates cash and drives exploration, which is a little bit unusual for North America, believe it or not. So we're thrilled with our operations. We're in 2 world-class belts. The Argentinian belt, as I mentioned, we have our neighbors of Yamana producing 225,000 ounces a year. To the south, we have Anglo producing 250,000 ounces a year. And then to our northwest, we have Newmont producing 350,000 ounces, amongst a bunch of other companies. And so, we're very excited by this belt and the prospectivity of this belt. We are the largest landholders on this belt. So we see lots of potential and lots of scope for growth there. And then in Brazil, we do not feel this is a deposit. We currently have 58,000 hectares in Brazil. We feel that this is a district and we control the significant portion of the district.
Yeah. You recently published the PEA on the Monte Carlo project. Can you give us a sort of brief summary of results and what does the future hold for the project?
Well, yes. I mean, when you speak of an embarrassment of riches, that PEA is probably the best PEA I've ever seen. And obviously it worried us a little bit because it was so good that it was somewhat unbelievable.
Yeah.
And so, aside from the fact that we had done in 2018, we had done an internal, we had commissioned an internal scoping study by a third party called PEK, which is a group of RTZ engineers. And basically, they had very much the same construct and very much the same parameters. The only difference, and the numbers were good, but they weren't as good as the numbers we had here. Now, there are three major changes that we had. And those were, one, that the gold price had moved from $1,200. We used $1,550 in this study. Two, the real in Brazil went from 350 to the dollar to 5.25 to the dollar, where it's now about 550. And then we also had done some metallurgical testing in Brazil, which enabled us to reduce our capex by not requiring a customized plant. So that's kind of the lead into this PA. But at an NPV5 basis, the net result was that we ended up with 432 million of NPV with a 76% IRR. Those, the numbers were higher, but what we did is we came in and we added to our capex. Currently, there's 110 million of capex. Not only did we add 25 million or 32% contingency, but we also looked at adding capex to other items to make that number a little bit higher in order to make, to give us a lot more cushion. We also reduced the operating expenditures. Sorry, we also increased the operating expenditures as well in order to just make sure that we had more cushion to the numbers. Now, what gave us great comfort is that we had very good hard data that we were working with to create this PA, and the engineering firm had the engineering firm, I should mention, is a group called G21. They're a very, very strong group in Brazil. We use them at Largo. We use them at Desert Sun. We've never had any problems with regard to the quality of their work. And so we also had hard data where we had Jacobina from Yamana that we were still very close to. We had Largo's Maracás project that we're still very close to. We used another company called Amarillo, who just completed a feasibility study. And there were two other groups that were used by the engineering firm. And so they managed to come up with a scenario where we had 7-year mine life of 103,000 ounces at a cost of less than $500 per ounce all in. Now, that's an extraordinary number. That puts us probably in the lowest 5% of any production cost for any gold company in the world. So it's quite extraordinary. Now, I appreciate that this is only a PEA, and I appreciate that this is at based on an inferred resource. But what gave us a great deal of comfort is that right now we have 4 rigs on the property, and by March of next year we're targeting to have 1.5 million ounces versus the 800,000 ounces that they used for this study. So at that point, even if we just add the additional ounces as a tail, take it from 7 years to 13 years, that'll add at least another 200 million to our NPV. So the numbers will be even stronger. So from that perspective, we had a high degree of confidence with the quality of the work, with the parameters that they used in the inputs of the work, and the fact that we have this new drill program coming along that's only going to make the numbers better. And one thing I point to when people go, this is not totally believable. If you look at the slide on our presentation, you'll see that the OPEX is $26.39 per ton. Well, Jacobina, which is a marginally deep underground mine, mining at 2.4 grams, basically is producing at $42 an ounce. And so for a deep underground mine at $42, if we're looking at an open pit mine that daylights at surface, $26 is not that, is not such a big difference to an underground mine. So again, I believe that when we complete our 1.5 million ounces by the end of March, that we're going to do another PA. I think the numbers will be better. What we may see is we may increase our production, and I believe we will probably increase our production from 103,000 ounces a year up to probably 150 to 200,000 ounces a year.
Okay. What advantages would you say that you're seeing sort of right now operating in, say, Brazil and also Argentina versus other jurisdictions around the world? And obviously you've got quite a lot of experience in both those countries. What advantages would you say you're seeing with the experience that you've got working in those jurisdictions?
Sure. Well, I'll say the first and foremost, I'll talk about Brazil first, but first and foremost, when you operate in Brazil, you have to have the support of the local community. If you don't have that, forget it. It's not going to work. And we have, we're very fortunate that all 3 projects that we've had have had very strong support, and this one, is very much the same. We have a town of 5,000 people who are basically 2-3 kilometers from our base camp. They are very, very supportive of the project. And so from that perspective, that's the first thing that you need to have. Second of all, on an economic basis, we have very, very strong advantages because the infrastructure is fantastic. There's already a 69 kV power line running through our property. We're 1 kilometer from a paved road. We have an estuary from a major river that runs through our property. The real at 5.25, it's currently 5.50, but we use 5.25 in our PA. The reality is that that is very, very cheap. And so mining in Brazil right now is extremely inexpensive. When I was mining at Largo, when I brought Largo into initial production, basically the cost of that, the real was at 1.6 to 1. So frankly, a hamburger in the town of Maracás was more expensive than a hamburger in the Savoy. Now it's come full circle, and the expenses of operating in Brazil is very, very inexpensive. So we're benefiting from the infrastructure. What I'll also mention is that our geology is very, very good, and I'm not going to get too much into geology, but what I will say is this: is that we have no refractory ore. So the mineralization is free and liberated from the sulfides. So that means that when we process our gold mineralization, gravity alone, just by using gravity, we recover 82% of the gold, which is extraordinary.
Yep.
And then basically what happens is that we use flotation, and that will recover another 15%. So we get 97% recoveries, and because there's no refractory ore, we don't need to use a lot of chemicals, we don't need to use a lot of inputs, and that makes it very cheap. Also, with the CapEx, it means we can use an off-the-shelf technology plant for a plant. We don't need to customize it a great deal, and that has reduced our CapEx and our OpEx very significantly. So that's another economic advantage in Brazil that's been tremendous. Argentina, Argentina continues to be Argentina. I know, there have been British companies that invested in the canal system. Manchester Canal, I believe, invested in Argentina in the 1890s, and I don't think probably from the 1890s things have changed dramatically. They've always been a little bit tumultuous in Argentina, but in terms of they run inflation of about 40%, which is makes issues more complex, but at the same point it reduces our costs. 60-70% of our costs are US dollar denominated. So when we find that the currency gets depreciated, which it does quite often, it's a very advantageous thing for our costs. I would say again, we're located in a province called Santa Cruz province. It's actually the home of the Kirchner family, which is a political dynamo in Argentina. Alicia Kirchner is the actual governor of Santa Cruz. It's been a province where people have been mining, Anglo and such. Yamana have been mining for 20-30 years, and the fact is there's been no operational hiccups created by the government. It's a very, very good state to be operating in because basically it's a big landmass with a very small population base. And so to a certain extent, you could almost be on the moon. I mean, you don't see people, you don't see anything for long stretches of time. And we have a fly-in, fly-out camp. And so we're quite isolated, which has been very positive for the COVID circumstance, because basically we have our own little bubble. And we've had no instances of COVID, and we're very, very cautious. Argentina has been very, very restrictive in terms of their protocols for COVID. But anyway, so I think in terms of Argentina, we have the deflationary environment for the currency has been positive for us. Also, we're looking at mining open pitable resources that between two areas averages 5.25 grams per ton. That's extraordinary for open pit operations. And so basically, even with that, we're looking at our cost being probably somewhere close to about $1,000. But that gives us lots of cushion, lots of room for maneuver to make a very profitable operation. So it's a small operation, 1,000 tons, 1,200 tons per day. But at the same point, we anticipate that we'll be generating 25 million free cash next year on our base case. If we add the heap leach I think that number will be closer to 40 million. So we can generate some strong cash out of Argentina.
Yeah. So what are some of the challenges that you're facing as a company, and how you actually getting over those challenges? I suppose in both countries, and I suppose starting off with Argentina.
Well, we've been very lucky. I have to say, there's a lot of competition for attention. There's a lot of competition for capital. Which thanks me again for having us here on the Dig Deep. The reality is that we've been very fortunate. We've been able to grow our business. We started very much with only a dream in 2017. We're now raising capital for our go public scenario in December of $25 million at 140 million Canadian valuation. So we've been lucky, but like any junior, like any starting company, the challenges that we've had in Argentina in particular have been COVID related. We acquired this mine in March of this year, so just as COVID struck. That said, the team that have been down there in tandem with our guys that we've managed to get into Argentina have done a really good job, and so the mine is actually being able to make money and continue operating, even though it's operating with 40 to 50% capacity of manpower. But from that perspective, again, the grade has been so strong. The opportunity left by the previous owners has been where they left a first-class mill, they have first-class infrastructure, equipment, fleet. So that's been tremendous. What I'd say is that we've been able to manage very well, and we've been able to set ourselves up, I believe, for just very, very strong growth, and that's been really encouraging.
Yeah, you mentioned previously about trust within the community. I think you were talking about your Brazil property. What kind of ways are you building that trust in both those jurisdictions, in Brazil and Argentina? What are some of the things that you've been doing to gain the trust of the local community?
Well, yeah, I mean, I kid you not when I mentioned with Argentina that we're in Patagonia. Basically, the closest sizable community is about 400 miles away. So from that perspective, there's not really, we have some guanacos, which are some kind of llama type animal. They basically are our local community.
Right. Okay.
So it's, I believe in the whole province, there's probably a population of 200,000 people. It's a very small and very, very sizable landmass. But basically with the local community, they're familiar with mining. There's 4 or 5 big, large size mines in the area. Basically we employ people directly from the local towns as much as we can. We've offered, and we've certainly brought in a lot of expertise in a very short period of time to educate these people. The local community are very hungry and they want knowledge and they want to learn how to do things and become internationally competitive, and we're providing them with that. Also, basically, we're utilizing the labor force. We're providing them the first crack at services like drilling and labs and other things. Those are somewhat customary. I think in terms of the because of the large landmass and the very limited population base, our strength is with the community has really been more our relationship with the government, and basically it's been first class. The provincial government, we've had a first class relationship with the local government, as well as the unions have been very helpful for us coming into this very difficult environment with COVID. In Brazil, it's a little bit more different, and we generally Kurt Mencken, who's our chief operating officer, who was the country manager and the manager for Jacobina, for Desert Sun, for Anglo, and then Desert Sun, and then he came to Largo. What people want most is they don't want charity for one. What they want is they want to enter the business cycle. And for example, in Maracás, for Largo, we had a town of 35,000 people that basically probably 90% of them were unemployed. And so from that perspective, we brought into that town a business and a business community, a business ethic. We hired a lot of the workforce, so gave them a lot of pride. We did contribute in terms of provided them with medical care and medical assistance, schooling, and things like that. But generally, what we tended to do is we tended to give it to the government so that they can run it. It's not our objective to run and such. But basically, I look at the town of Maracás now, having gone back, 5 years later, and there's a lot of pride in the community. There's a lot of service industries that are ancillary to the mining that have built, and so we're using that same kind of formula as it relates to Monte de Carmo currently, which is 2 kilometers, a population of 5,000 people. First of all, Kurt is phenomenal at this, but basically, he gives them respect. Even though they're a small community, they get respect and they get treated with respect. They get listened to, what they need, and we try to provide them and help them with not giving them, but helping them build, so that they can have that. And then the impact of bringing new jobs, with regard to this site that we have at Monte de Carmo in Brazil, will probably be something in the region of a couple of thousand people directly or indirectly from the town will be employed by the mine, whether that's in construction or whether that's through providing services. You'll see new services. You'll see new service industries, mechanics, welding shops, tire shops, lots of different things, lots of food stores. You'll see lots of ancillary businesses that will come with our mine. But again, we're just like in the community of Maracás. We'll provide them with education. We'll provide them with housing. In Maracás, we provided housing for, I think it was about 900 people. But we'll figure out exactly what they want. We're not going to give them everything they want, because that ultimately leads to a necessity from them, where we become their parents in essence, and giving them pocket money. The reality is that they have to learn to stand on their own 2 feet, and what we do is we enable them to not only stand on their own 2 feet, but to thrive in a competitive environment, so they can take those skills and they can transfer them elsewhere.
Yeah. And I suppose a lot of people outside of the mining industry don't realize the effect of a mining company coming into an area like that, because you're giving a lot of people prosperity. It's not just providing jobs, but there's numerous other benefits from a company going into that region. And like I said, prosperity, that feel good factors. So it's not just providing jobs. And it seems that you've mentioned quite a few there, that it's given the whole area a new sort of lease of life and a future as well. Yeah. And people outside of mining don't necessarily understand that kind of impact.
Yeah. Well, I look again, and a rule of thumb that I kind of use is that for every mining job that's created, you tend to have 3 to 4 other jobs, ancillary jobs created. But I look at Maracás, for example. The state of Bahia, which is right next door to where we are today, in Monte de Carmo, basically, the state had wanted to drive gas power through the state, and for a long time, to provide to the local communities. But they didn't have the capability to do that. And when the mine came in, it gave them the strong capability to provide gas to this part of the country. So from that perspective, as you say, there are many ancillary developmental benefits that come with a mine, because it does bring a lot of jobs. It does bring a lot of prosperity. It brings complications too. Let's not forget those. But all in all, I think the benefits certainly outweigh the negatives.
Yes, certainly does. You recently completed an acquisition of a neighbouring property in Argentina. What actually fueled this decision, and how will this project be integrated into the Cerrado story?
Well, basically, we acquired a company called Minera Mariana, and basically this company has 380,000 ounce indicated resource, as well as a 40,000 ounce inferred resource. And it actually straddles our border. We have a deposit in the northern boundary of our property that's called Escondido. And basically, this property actually splits the Escondido deposit in half. So this is the other side of our deposit. And basically, what we see is of the total ounces, half of those ounces, or about 200,000 ounces, will go to a heap leach operation that we're looking now to bring into play. Our hope and our expectation is that by the end of next year, that we'll have a heap leach operation that should be able to generate 20 to 30,000 ounces per year. And that will come from this direct acquisition. So of the 400,000 odd ounces that we're acquiring, 200 of those will be used for the heap leach. And then once those ounces have been used, the ounces below, the 200,000 ounces below, will be fed, because they're higher grade, they'll be fed to our plant. So we have every intention to use 100% of those ounces into our operations. So it now takes our global resource in Argentina to about 1 million ounces, up from with about 600,000 ounces of indicated resource and 350,000 ounces of inferred resource. So we now have a pretty good scope and a longer life to grow from. So it was just a very opportunistic and, in our view, inexpensive acquisition.
You recently entered into an agreement to go public, obviously, as you mentioned at the beginning of the podcast, through a reverse takeover, and we'll be doing a capital raise and concurrently, obviously, going public. What are these funds are going to be used for, and when will the stock be available to obviously trade?
Yeah. So again, we're looking to be trading sometime in Toronto, sometime in early December. And basically what we're looking at is we're raising up to $25 million Canadian at a valuation of $140 million Canadian. And the objective for these funds predominantly will be to go to Brazil. 20 million of the funds will go to take us to feasibility, to complete a feasibility study, and to take us to a construction decision in Brazil. With regard to Argentina, Argentina is profitable. Argentina will generate, as I mentioned, we're targeting $25 million of free cash next year. So what we're doing is we're kind of setting up two separate bubbles, where Argentina will look after itself, will generate capital to grow. Initially, it'll focus on that capital remaining in Argentina, but the funds we raise now will be raised to take Brazil to complete a feasibility study, and then by the end of 22, our expectation is we'll start construction. And at that time, we believe that Argentina will be sufficiently large that we can actually use the cash flow from Argentina to grow the production, to grow the construction, to pay for the construction in Brazil. Now in Brazil, with construction, we'll have some debt, obviously, but the equity required alongside that debt could very much come from Argentina.
Okay. And concluding, I wonder if you can give us some reasons why, and obviously possibly your unique proposition as to why someone would want to invest in you. And I suppose if you can give us an outlook of the company over the next, say, 5 years or so.
The biggest, I would say that we are a growth company, and we have one very phenomenal asset in Brazil, very, very unique, very large, high grade, strong economics. That's what everybody's looking for in the mining sector. That's what everybody wants, and that's what we believe we have in Brazil. In Argentina, we believe we've only been there for 6 months. We did due diligence for a year before that, but we're only now starting to gain our feet in Argentina. But what we see there is far greater than what we expected when we made the acquisition. So we're in 2 world-class belts, 2 substantially highly economic projects that are going to generate a lot of cash flow, not only at $1,900 gold, but also at $1,300 gold. So from that perspective, we will be a low-cost gold producer. We will be producing 250,000 ounces of gold a year at a low cost by 2024. and that'll generate a lot of cash. And ultimately, I believe that is why people should be investing in Cerrado. Not only Cerrado, but people should be looking for those attributes for any mining investment.
Yeah, certainly. Really appreciate your time, Mark, for obviously giving us an overview of Cerrado, and also obviously telling us more about mining in Brazil and Argentina. If our audience wants to reach out to you and obviously get some more information about the company and maybe might have some questions around mining in Argentina or Brazil, how can they go about doing that?
Well, I think the best place to start is our website, which is www.cerradogold.com. And from there, you can look up the different people. Nick Campbell is probably the best first point of contact. But we're all accessible, we're reachable. Please don't hesitate, either you or any of your podcast members, to reach out to us. We're always happy to engage with our story.
Yeah, and are you on any social media platforms at all, yourself or the company?
We are. I think we're on Facebook and Twitter, amongst other platforms.
Yeah, no worries. And also, any of the listeners, if you want to reach out to Mark, or you can alternatively reach out to myself, and I can pass any messages on. My email address is rob@mining-international.org. Thanks again, Mark. Really appreciate your time and giving us your story and telling us more about obviously mining in Brazil and Argentina. And I think both jurisdictions are exciting. There's a lot of growth in those countries, and appreciate taking the time to give us your views.
Well, thank you very much. I really appreciate your time and those of your listeners. Thank you.
Yeah.